Welcome to Zen and the Art of Real Estate Investing. What if you could learn from experienced real estate investors, find out what got them to where they are now, get insight into their daily habits, and take these insights to inspire your own growth? Each week, Jonathan Green shares an in-depth look at the mindful approach to real estate investing. Jonathan is a real estate investor, advisor, and coach, as well as the founder of Streamlined Properties and the team leader of Streamlined Properties on Market, brokered by eXp Realty. Whether you are looking to start from scratch, get to the next level, or just a straightforward and honest approach to real estate investing, Jonathan seeks to provide a free mentorship program you can take with you anywhere. Now, here's Jonathan.
Welcome back. We're coming in hot this week with Ricky Carruth. Yep, that Ricky Carruth, 20 years as an agent and investor, all over YouTube and Instagram. You can't miss him. He's coming in and he's going to tell you about how when he started, he lost it all and came back from it, went from zero to diamond, just like his coaching program. I know you're going to like this one. And before we get to the episode, I'm going to actually do the quickest reminder this time. Please listen. If you like the show, go in there, give us a review. Make sure that you go up to the top in Apple Podcasts, hit the plus and subscribe. It's what helps us. Let's get on with the show. This is episode 30 of Zen and the Art of Real Estate Investing with my guest, Ricky Carruth. Ricky, welcome to the show. Thanks so much for being here.
My pleasure, bro. My pleasure. Good to be here.
Yeah, man. I'm really excited to talk to you because I've been following you for so long on social media, watching what you've been giving away for free for years. But let me give the audience a little bit of the bio just in case there's a slight chance they don't know who you are. Ricky is 20 years in the real estate business as an agent and investor, the founder of Zero to Diamond, which is a social media platform and free coaching program for agents to learn and collaborate. He is also looking to buy, is this right, 100 million in 2023 of real estate?
Yep.
Awesome. And if you don't know Ricky, he has over 230,000 followers on Instagram, over 95,000 subs on YouTube, and has just been giving away free information for everybody for years. How did you get started as an agent or an investor?
Yeah, man. No, I was 20 years old. I failed a history class in college. I went to four different colleges in 2 years and decided to try real estate. So I was roofing houses with my father at the time and didn't want to do that forever. So yeah, I just fell into real estate. I'm in a really low population little beach town, and there's really not a whole lot of options. There's no Wall Street or big buildings or, all these job opportunities or whatever. So yeah, real estate was really cool. It was a nice little industry to get into. And down here, I sell mostly Gulfront condos. It's a very tourist type area. So we have 7 million visitors a year. So the beach, the condos on the beach is a really good market to be in as I got into the business and everything. So that's kind of what I fell into. And as far as investing goes, I started investing in, as soon as I really got into real estate, I bought a house to live in. And then I started flipping houses as I started making money and eventually lost everything because of that. I was over leveraged, flipping houses, didn't know what I was doing. So, when I left real estate, I was completely homeless, sleeping in my car, eating out of people's refrigerators. I eventually got back into real estate in 2008 and just started building my business the right way. And as soon as I had enough money to invest again, I started buying properties.
When you first started, before it all went bad, were you also licensed as an agent or were you just investing to start?
No, investing was always a secondary, something to just do on the side. Being a real estate agent was my primary. I got in the business to be an agent. I got in to help people buy and sell real estate and make commissions. And that was really the baseline, the foundation of my real estate career.
Was it all over leveraged, which is very popular because you think it's going to be easy in the beginning. So you think you can do multiple at a time. Was it too many or just too much leverage? And then market downturn usually doesn't help.
All three. Yeah. So, prices were going up so fast. I was watching so many of my clients were making so much money flipping. And so I had money and the bank was giving away even more free money at the time. And so it was really easy to get financing and to get funded to go out and buy deals. I would buy deals and sell them and make a ton of money. I made so much money, and I would sell a house and then buy 2 houses, sell those 2 and buy 4 houses.
Yeah.
And I kept building and building it up. And when the market turned, it turned so fast that for the inexperienced guys like me, I just didn't know which way to turn. I mean, there were people that were 40, 50, 60 years old going through the same thing I was going through in my early 20s. So I was really grateful for that looking back. And I knew it at the time that that was going to be really cool. But no, when the market turned, I could not turn around and sell those properties for the profit I had projected.
Yeah.
And I just held on, depleted my funds, paying the mortgages to hang on to those properties. I sold a lot of them for exactly what I owed and got out from under them. I ended up having to let some of them go back to the bank. And I depleted all my cash trying to hang on, thinking it wasn't going to last as long as it did.
Yeah.
And it depleted all my cash. Then I couldn't pay the mortgages and I had to let those go and lost everything. It was
how much time did you take to reset? And then what led you to decide to go right back into it? What did you learn in the between time that helped you go to where you're at
2005 was I sold my last house, and I didn't start making money as a real estate agent until 2008. May of 2008. Between February 2005 and May 2008, I didn't sell or have any hand in real estate whatsoever.
Yeah.
So I went back to roofing houses. I landed a job on an oil rig for a year. I was serving tables. I was doing all kinds of different things. What I learned is that number one, you have to have a long-term plan. You have to think worst case scenario, and then whatever you're getting into is going to be a home run in worst case scenarios. That's if you're taking investor money, or if you're betting everything you have on it. It's got to be worst case scenario, still a home run. If you've got disposable income that you don't care if you lose, then of course you can go risk that. And if you lose it, who cares? And really bet on some high risk investments. When you're talking about your livelihood, you really got to have worst case scenario is still, you're still okay. And that's what I wasn't prepared for, because I didn't realize the golden rule for me growing up to invest in real estate. That's the golden rule. But nobody ever told me there was a right way and a wrong way to do it, and you could actually get caught. Plus, 2008 was one of those once in a lifetime type crashes, I think, too, that people didn't even realize that could even happen. It was just crazy times. Yeah, I learned that as far as being a real estate agent, it's more about helping people rather than closing deals and building that database and building your name and reputation and your marketing and all that stuff. Yeah. And on the investment side, you just have to be really smart and think worst case scenarios, with money that you can't lose.
Yeah. Wouldn't you liken I feel the same way. I know from watching stuff that you put out over the years that you really believe in that people to people connection. But I think that some new investors don't even realize how important that is in the off market game. To acquire properties in mass, you have to be still good with the people, because you have to get them to trust you and you have to be trustworthy. So I love the play of the agent business with investing. And I always wonder why everyone doesn't have their license. But did you learn a lot just from dealing with the people during that time that helps you in the off market game as well?
Yeah, kind of. I mean, it's about people at the end of the day. So, that can carry into the real estate investing world as well. But the real estate investing world is a lot colder. It's just cold, hard numbers. These numbers work or they don't. There's definitely the people side to it, but not as much as trying to represent buyers and sellers on their purchases. That's a whole nother level.
Yeah.
It's really two different sectors, completely different sectors of the industry. It's almost going and playing Texas Hold'em 1-2 no limit versus limit, or 2-5 or whatever. But it's two completely different games versus playing a tournament. Those all have completely different strategies.
Yeah,
Same
especially asset bases too. Your asset, if you're going multi with hundreds of units, obviously that is going to be full numbers calculation. Down to mom and pop flipping is going to be a little bit of a different story, but the numbers always have to work.
Yeah. Now with my flips, I pay all cash for my flip. I buy them cash and then I fix them and flip them.
Yeah,
it's not a game I really love to be in. I just have partners that I love. So I want to maintain those relationships. Otherwise, I wouldn't flip at all, because we flipped 100 houses in the last, say, 5 years. And if we would have kept 30 of the best ones, we would be so much more wealthier. We would have so much cash flow. We would be sitting in such a great position right this second.
Yeah.
But we flipped it to make 10,000 a piece or whatever. And
Yeah, that
so,
margins are smaller where you are. You're in the Gulf Shores, right? The margins are smaller when you're doing mass flipping. So if you're doing a whole flip to generate 10, 20, 30,000, you have to just do it mass and get them out to make it worth it, right?
and even then, it's not really worth it because you're paying all these capital gains taxes. And so that's the flip side to the whole thing. When you keep the property, you're not paying taxes. You get the depreciation, appreciation, and cash flow. Whereas when you flip it, you're putting money into it and then you're flipping out of it to pay taxes on the gains. So if you go in and do and make 10,000, shoot, you made 5,000.
Yeah.
I don't know. I'm not a huge fan of the flip unless you're in this market or you have these situations where you can make 100,000 minimum per flip, or you make 300,000, or you can make $1 million on a flip or something. Then that becomes very interesting.
Yeah. I mean, I slowed down. I think now I'm looking to at least be at six figures on a flip, like you said, to make it worth it. But I'm in a market where there's a lot of opportunities for that. In South, it's just not that easy. When I was in Florida, I was able to find some, but there's plenty of towns where you have to do volume instead of one-off's not going to work on the numbers.
Yeah, dude, it's tough where I'm at as far as that goes. So that's why I'm looking, like you said in the beginning, to go out and venture out beyond my market and try to get out there and buy some of these bigger deals, which I feel like are going to come through. I think we're going to see some really good deals on some big commercial deals and some big multifamily deals. You can't just double the cost of debt in an industry where it is cold, hard numbers and not see some really staggering effects. So
yeah,
I think we're already seeing signs of this happening in the multifamily sector.
For sure.
And we'll see how it all plays out.
What's your ideal target asset like right now? Are you looking for apartment buildings? Or are you looking for some cross-commercial type of plays? Or just
Right now,
numbers?
Right now, I'm just looking at apartments, but I'm not opposed to. I have a guy that and I love commercial. I've got commercial buildings where I live, so I've got plenty of rentals where I'm at: duplexes, fourplexes, single families, commercial buildings, all over my county. But I don't. It's basically all owned by me. I've got a partner on a couple of them, but what I'm talking about is going out here, finding the deals, raising the money, and doing these really big 10, 20, 30, 40, $50 million deals. So I've looked at about 50 plus deals in the past 6 weeks, and we haven't seen anything that we're like, man, that's a home run.
Yeah.
And that's because prices have just escalated so much. Rents are maxed out.
Yeah.
I think we could possibly see rents continue to maybe go up, but if they do, just by such a small number, whereas a lot of these guys are buying these 3 and 4 caps with the expectation they're going to raise rent 20% a year, and the rents are already maxed out. So if I can find something that rents haven't been raised in years, 2-3 years, and whatever, there's some deals out there, of course, but man, they're so far and few between. Everybody wants an arm and a leg. Yeah. And the cap rates are so small,
minimal.
Cap rates, interest rates exceeded cap rates for the first time several months back since 2008. Just something's going to give there. You can't, like I say, double the debt. You saw the article that there's $175 billion worth of global commercial debt that's delinquent right now. That's just a complete red flag right there, that this is the writing's on the wall with these big deals. And I think it's going to take a little longer for it all to flush out, but I'm just sitting here looking at every deal that comes past me. I get deals thrown at me all day long.
I bet. But I think you're showing that you obviously have the resources to close the deals, but it's so much more important to be patient, especially when people are serving you what they consider good deals. I feel like sellers are still being stubborn now. And at some point, like you said, that's going to break. And then the deals are finally going to start making sense. And it's coming soon, I think.
I do too. Like I say, we're already seeing the first signs of it with some of this stuff sitting on the market. People aren't interested, man, when debt's twice as much. And even the people that are paying cash, if you're paying cash, you want to, if you've got that much capital, you're not just going to deploy that into an asset is going to come down in value. Right. Even the cash buyers, they're wanting deals. So people know that and it's different than residential. Residential is a lot more solid. There's no supply. There's so much demand. We're already seeing multiple offers on properties all over the country
Yeah,
again.
absolutely. We saw lines this weekend. There was like during the pandemic, we saw the huge lines at open houses just because of access was a little bit limited and it was crazy. But like the lines were back this weekend. That was a shock. Okay, it's not what everybody said. Like people are still buying. But you're right. Like commercial as an asset, there's so much large scale commercial available after the pandemic that now it's really for those of us who like it is just waiting out to see when they're going to get realistic. I mean, if somebody told you 5 years ago that people would be like fighting over 5 caps, we would have all thrown up. I mean, like back then, everyone's like looking for 10 caps. And now it's like you said, California, 3 cap sounds good, which is crazy to me.
Yeah. No, 3 cap doesn't sound good. And that's the problem is the people that are buying them, they're going to be in for a rude awakening because if the value drops way below where they bought it for, and even if they could raise rents, which I just don't think they're not going to go up like they were.
Yeah.
Even if you could, if that is in fact your strategy to say, okay, we bought it at a 3 cap, all we have to do is raise the rents, and then the 3 cap is now a larger purchase price because the income's higher. All you're doing is, even if that were the case, like I think best case scenario, you sell that property for what you bought it for at a 5 cap or a 6 cap. You raise the income just to get it up to what the cap rate's supposed to be. And then people buy it for exactly what you paid for. But that's best case scenario for those guys. I think what's realistically going to happen is rents aren't going to go up. Now people want to buy that at a 5 or 6 cap, so it's worth 50% less than what you bought it for. I think that's the kind of stuff we're going to see out there. Some really wild stuff.
Yeah. Over the years, what's been like one struggle that you've seen for just general investors? Obviously, you're a coach, so you're really trying to help people do the right thing. Where do you see investors getting hung up all the time? The market's changed a little bit, but there's over your years, where are you seeing like the biggest investor hang up?
I don't know. I think it's different for everybody. Your entry-level investors, your more seasoned guys, and everybody in between. People raising money. There's people out there that can't raise money. If they want to, and you got people that don't know what they're doing that's raising money.
That is very big.
Which also presents a whole nother problem because it's interesting because right now syndication is a real, trending word. People are out here syndicating deals that have no idea what they're doing. The investors are saying, oh, thank God I'm finally in on a real estate deal. And it's a 3 cap.
Yeah.
And it's just not going to end well.
I feel like I was saying a couple episodes ago, like I feel like some of the bigger syndications they're good marketers. So they're able to catch the investors with cash who are like, ooh, this sounds great. But they don't even have as much money as everyone thinks, which then puts you at risk as a partner in the deal. But they can make it look so shiny now, and people want it.
Well, the thing is that the syndicator's getting a fee when it closes. Then they're getting all this free depreciation because they didn't put a dime into the property. They're reaping all these benefits. And if the game plan is to raise rents and sell in 5 years, maybe the market goes down and back up before then. I don't know. It's going to be interesting to see how it all plays out. But I'm just sitting here, like you say, patient because I want people to know that when I say, okay, here's a deal that we can invest in, people are like, okay, Ricky's turned down 100 deals so far. And this is 1 out of 100 that he has finally found that he thinks this is something.
Yeah.
And I want people to have trust in how I evaluate these deals and what I'm actually willing to put my name on the line for, that this is a deal we want to get into, and then do the best I can do to make that investment extremely successful and have people that want to reinvest and build that following up.
Yeah, I feel like you've given away so much information for free over the years that you've built the trust dialogue where you could just put out, and like exactly like you said, now at this point, when you say, I'm going to do a large scale syndication, there's so many people for years who have trusted you. They don't have to overthink it. When you look back to when you started really going in on YouTube and social media on just real estate in general, what led you in the beginning to do the opposite of what everyone else was doing and just give away all of your coaching and ideas for free? Because I've always valued that principle, and I see it like year after year, you're still doing it and it helps so many people. Why did you think that when other people were thinking, how can I monetize this?
I tried the monetization route for a good 6 months, and it was like beating my head against the wall, especially in the real estate agent world, where you have the thing is, if you need help in real estate, chances are you're strapped for cash. And if you don't need help, then you got plenty of money. Maybe I should have geared a product around the people that had money that could help them,
Right.
but I didn't. I went after newer type agents that were struggling, trying to reduce the failure rate in the industry and stuff like that. But what's been interesting is the way that I looked at it was that if I go free, I'm going to open up the floodgates and I'm going to build this massive following, right? And what's going to end up happening is a lot of these people that are struggling now or that are new now, they'll turn into really high producing and successful agents over the next 3 to 5 to 10 years. I'm 6 years in right now, or getting close to 6 years in doing the coaching. I'm just now seeing signs of people, like I have 2 people that I know of that are number ones in their MLS, tons of people that are top 10.
Yeah.
And many more on the way. And like the new agents that are getting in right now that are getting into my program, I'm not going to really see those guys shine for 3 to 5 years or even 8 to 10 years. And so I'm looking so far ahead that some of these future mega influencers and mega producers and pillars of the industry are going to have been part of my program from the first day they got in the business. And so eventually I will have this really concentrated group of really high producing, high quality business people. And it's already happening. We've already got that now, but it's going to get better and better. So I had to start from the bottom, but I had to do it like that because I felt like I wasn't growing fast enough. And when I say grow, people who know who I am, they know what I'm doing. They understand the logic. And I haven't hit a home run on anything monetarily speaking. For many people, I'm sure I've hit home runs, right, in their world. But in my world, I haven't really hit that one out the park where boom. So that's why I'm still grinding so hard, is to just continue to build the influence, help as many people as I can, and try to develop those relationships and collaborate into other businesses.
Yeah. So when you look at it over the long haul, this is a question I've been wanting to ask you for a long time. How valuable do you think having a license is for not just for an investor, but investor who wants to do both? Because I've always thought, I don't understand why real estate agents don't invest. They have the access, they have the resources, and then you find probably, 99% of agents probably have no investments. That's crazy to me. What do you think about that in terms of having your license? I feel like everybody, if you're licensed, should be investing.
Yeah, that's one thing that I'm trying to do this year is try to be a little louder with agents who need to invest. I'm trying to take my following, who is 99% real estate agents, and say, hey guys, you need to be investing. It's the end game for real estate agents.
Yeah.
What can I do to help you create a game plan around that? So that's something that I'm doing. I'm going to try to create an investment group where we're collaborating on this kind of thing. But yeah, it's crazy. A lot of real estate agents don't buy real estate. And I think what it is that they come from this working world and like being a real estate agent's another job.
Yeah.
Right. And they're never really in this investing mindset. I think more people are now than ever.
Yeah.
But I think overall, generally speaking, that it's just another job. That's what it was for me. It was just another job. I was lucky enough to say, okay, how can I use my money to make more money?
Yeah.
But I didn't really even understand the real true benefits of real estate investing till really here recently. Some properties, some duplexes and stuff that I bought back in 2011 and 12 that were really just crap properties. They've turned into some of my most prized possessions. And they've went up so much in value. The rents went up so much. I bought them for so cheap.
But you held them. Like you said in the beginning, the short term versus long term is so important in all aspects of real estate. I think people are like scratching to get money or to get success, and they just don't realize like it's not going to happen overnight. But you could have taken those and say somebody offered you a year later a $5,000 profit. A lot of people would just take that, but then you could lose $100,000 over the next 5 years by, giving in and thinking that was going to be a score.
Yeah. Yeah, exactly. I bought them to keep them, right? I bought them to keep them forever. I could have sold them at the peak for just god awful number.
Yeah.
I almost did sell a fourplex because it's just been a pain managing it, but I didn't. I was like, nah. And now rents are just so high. It's just making so much money. I didn't really, if I would have known, I would own more property now. If I knew back then what I know now, I would have put everything into buying properties because, I'd be so far ahead. But you don't think about it because like agents, like I'll talk to agents about investing and they're like, I'm going to make $200 a month and I'm going to be managing it. I'm going to be doing this. I'm going to be doing that. I'm like, but dude, you're going to get all the appreciation.
Yeah, they forget about appreciation. Yeah, exactly.
You're going to get your debt. The debt you take on is going to get paid off by the property over the $200. You're going to be able to do depreciation on the property and have write-offs for your taxes. You got 4 ways to make money: depreciation, appreciation, cash flow, and debt, pay down, principal pay down. It's not just $200. It's so much more. I don't know, man. Appreciation. I saw a thing where I think it was NAR, maybe. They basically said the average sales price is going to go up $100,000 per decade. So like in 2020, it was $300,000, $400,000 in 2030, $500,000 in 40, $600,000 in 2050. Now, that's pretty tough to say what prices are going to be in 10, 20, 30 years. That's basically impossible to do. But when you look at inflation and when you look at everything, all the other factors, like real estate is going to increase in value, and you really want to own assets over owning cash.
Yeah. I mean, I think I grew up as a cash investor, the same as what you said. And then I still continue to mostly invest in cash when I can. But I think people get lulled into, like you said, when you were buying early, it was just so easy to get basically what you think is free money at the time. But then you can mismanage that. And I feel like that's what I think of when I think of hard money. I know you don't have to use it, but a lot of investors out there who are starting and flipping have to use hard money and they think somehow this is easy. But I feel like you can get really dunked on hard money real quickly, especially with the market.
I'm not a big fan of that, honestly.
Yeah, same.
If you're like newer and you're trying to flip houses with hard money, I mean,
so risky.
Personally, go do what you want to do. Listen to whatever guru you want to listen to. But just personally, I'm not a fan of that because it's just super risky. I don't know.
The rates and points are so high, and you also have no experience in doing what you're doing. And I think people who are flipping, obviously you flipped a lot of houses, like just something always goes wrong and their numbers are always wrong. So you're really like setting yourself up for just colossal failure. I really like new flippers. I'm always worried about 24/7 because I just feel like it's the easiest way to lose all the money.
And that's what I did. I lost everything. I mean, I made $1 million and lost every bit of it. So now I pay cash for all the flips. I have 2 other partners on that. And then everything that I buy that's like long-term, I take on as much debt as I can, 20% down. So I don't have the PMI, and I put 20% down and rent it out. And the plan is for it to pay itself off in 30 years and rents continue to go up. It appreciates. Nothing to worry about.
Yeah, I feel like in the investing world, everybody's so obsessed with cash flow and they just like discount appreciation, where of course you make so much more money in appreciation over the lifetime if you can just relax. But it's just like cash flow is sexier to people to talk about, just like they talk about how many doors they have. It doesn't make any sense. Nobody really cares. It's how much you're taking home and how much, better a life you can have by doing it all.
Yeah. And what's dangerous is short-term appreciation. If you're planning on what it's going to be worth in 5 years, that's a horrible game to play, or even next year or whatever. It's good to say, okay, we feel pretty certain this property is going to be worth more. Any property is going to be worth more in 10 years, in 20 years. Look at it on that basis.
Do you have any short-term rentals? Because I know you're in a vacation type market. Is that something that you're messing around with as well?
I've owned a bunch of them. I'll buy them for a couple years, sit on them, rent them out, sell them for big profits. I've done that, but I don't have any right this second. As the market, those were all short-term investments. Like I never wanted to own any of those long-term.
Yeah. They
were all, here's a good deal, feel pretty good. This is a great rental at a good deal, a good building. I can buy this and see what happens appreciation-wise over the next couple of years and sell it.
Yeah.
So I rode the wave up and really sold at the peak, really, on a couple of them and did really well. One of them, actually, we bought it for $270. It's me and a partner. We put 20% down, so it's like 30 G's a piece. Then we sold it for $425. Just couple years later. And then we took that money, 1031'd it into a commercial building for $450. We're renting it out for $4,000 a month. We put up another like 125 a piece, right above above what we had coming off the condo. So right now, I was in it for 150,000 total, on my side, cash. We refied out of that 450 property for 300, got our 150 back. So I got my 150,000 back. Yeah, I'm out. The note, we make about $2,000 a month on top of the note and everything. So I'm making $1,000 a month, complete infinite return, zero money invested at this point, and it's making $1,000 a month. So now we're going to enjoy depreciation, appreciation. It's paying that new debt off, and we've got $1,000 cash flow on something that, I put 150,000 into it, but I got it back.
Yeah, now you have it back. Yeah, you talked about partners, again, help for other investors and new investors and really experienced investors. What have you found, not the best way to find partners and then the best things to look for in partners? Because I think it's really important in deals because partnerships can go so haywire in investing. What have you found are the most important things for you when you link up with a partner and this is going to be good?
The partners I have that we work together on these local properties, these are people like the one guy I did the condo deal with, we went to high school together. And then the other partner we have on flipping, he was a client of mine for 10 years where he bought and sold stuff. And we were he was like family. We're eating dinner together and everything else. And it's not like I went out and pursued these partners like, hey, let's be a partner on this. It's just something that just happened, right? So I didn't go out and actively looking for partners. It just happened to be like, hey, there's a deal. Do y'all want to throw in on this? The next thing, we're flipping houses every month.
Yeah.
So it just comes from trust of knowing these guys for so long and seeing them in business and knowing what their reputations are and stuff of that nature. Now, when you get into investing, in these big deals, you've got the general partners and the limited partners. And the limited partners basically the ones that put the money up, and they're basically almost silent partners kind of deal, where the general partners are the ones kind of running the deal. They find the deals, they manage the deals and everything else. The limited partners don't really have much to worry about. They just have to really trust the general partners. They're going to go out and do their job and increase the rents and the value and maintain the properties and all that good stuff. On the general partner side, again, it just has to be people that you really, they're like family. I mean, it's not good to be in business with family, I guess. It's probably not a good
that can go haywire
example, but I don't know. The guys I work with on the GP side are guys I've been in business with and worked with for a really long time on other stuff. And I think that's pretty key. It's hard to take someone you just don't know off the streets and just be partners with them.
Yeah.
That's tough.
I agree. I feel like too many people try to do that in flipping, whereas one's the money and one's the work. And that just never works out because it's not really an even trade like that. If I have to partner, I'd prefer everything to be 50-50 with the partners. If it's just because then you just know you're in it for the same thing. You got to make those decisions together and figure it out. But like you said, it does get a little bit confusing with the GP-LP situation and what you want. But if the GPs are great, you can just coast along and take that return and say you're investing in 100 doors.
The guys I flip houses with, one of them does all the work, right? But we all put up a third of the money when we buy the property.
Yeah.
And then the guy that does the work, he bills us.
Yeah.
He doesn't charge us near what a contractor would bill us for. Yeah. We go thirds on, he even pays a third of his. You know?
Okay.
So like he bills us and everything's split three ways on everything.
Today's episode is brought to you by Streamline Properties On Market, brokered by eXp Realty. That is actually my on-market real estate team. We have close to 50 real estate agents in 4 states, primarily in New Jersey and Pennsylvania. We work with traditional buyers and sellers and all investors, no matter what you're looking to do in real estate investing. We have you covered. You can get all the information you need at our website, which is www.streamlined.properties. want to get your take on this before we wrap up. You're so well known and on YouTube and on Instagram, and I've heard you talk about this before, and we actually talked about it just a little bit for a second before. What do you think on the investing side of all these what I call fake gurus? There's a lot of great people in the investing space who I feel like give a lot of good advice, but there's just a whole ton of fake stuff out there, and that's what I think makes it hard for real estate investors trying to figure out who's selling a class or who's selling like a future of learning really how to invest. What have you seen out there, and what do you think people should look out for?
It's the Wild West out there, because you can start a channel and you can go out there and basically say anything you want to say. There's nobody, watching this stuff that can shut you down and say, oh, that's not true. And a lot of this stuff is based on opinions too, what strategies you use and how you do it and stuff like that. So it is really tough. It's just like anything else though, right? Especially in today's world with social media, there's so many people that just think they're the geniuses of everything, right? You have to take everything with a grain of salt and look for the people that, that you have, feel like are super genuine and that you really connect with, to have the results, to speak. It's hard, honestly.
Yeah, it's messy out there. I feel like you're a great example of someone who has, again, given it away. And then now, of course, you have coaching programs, but I don't feel like you're not the type of person who's trying to push everyone into a funnel. Like you're like, hey, this is available for you if you want to do this, but also you just keep pounding out the content every day. And I think that's where people might be able to see. If you click on one thing and then you get onto like an email list and you get 50 emails in a day, something's wrong. Like the value proposition is off.
Yeah, everybody's trying to push their thing and get their products sold and stuff like that. And I'm just trying to build community. I'm just trying to build a network of people who want to collaborate and want to learn from each other and adapt as the world changes with technology and communication and stuff like that. I'm just looking 5 to 10 years out on everything.
Yeah, it's important. I think one thing I found like in investing specifically, because we do like in-person meetups, and the camaraderie of investors is so important because like you can watch people on YouTube, but that doesn't mean you can go out and do it. Like you have to like collaborate, like you said, with people who are doing it. I want to learn from people who did 20 more deals than me and then help people who are just trying to get started. But like investing is, people are so excited to try to do it that you really have to get in person, meet people. Obviously, it helped to have Zoom available after the pandemic. But yeah, I like what you said. A collaboration of your group, which is agents who are going to all learn to invest, is so important on the investing side as well.
Yeah, experience, right? Experience is really where you learn. You can collaborate and you can go to seminars and watch YouTube and stuff like that, but until you actually step into the arena and do some deals, and really it isn't until you do a few bad deals.
Yeah, for sure.
Until you really lose on some deals, you're really just floating. You can't really tell anybody. I heard so many, it was crazy because like I used to hear agents talking to their clients and they would be advising them on investing and stuff like that. And they'd be saying the wildest things. I would be eavesdropping on the conversations. And I just remember hearing agents say the wildest things. And I'm in the back of my head thinking, man, this agent has never lost on a deal. Like they've never lost money or lost their ass. They never lost, went bankrupt and stuff like that. And so it's hard for them to really say what to do when they don't really know what not to do. And they're out here telling people, what to do when it could be the exact thing. And the person listening is, tell me, agent, tell me.
Anything.
Yeah, that sounds good. Let me do this. And I'm like, man, be a little more cautious and be a little more patient.
Yeah. One last thing on this part. I feel like we were talking before about agents who should invest. But I think one of the hardest things is that I've found over the years, and the reason why I started my team and helped them all become investor friendly as well, is because most real estate agents don't know anything about investing. So when you have a client who wants to invest, like I can overhear the things. I'm like, are you serious? What they're telling them? Like they don't understand anything about when to use cap rate, what's good, what the cash flow is. They don't take into account property management, as a percentage. They don't know how to do CapEx. They don't know how to do repair costs. They have no idea about anything, but they're trying to give advice. And there's only a really small subset of real estate agents who can also give that advice as investors. Do you agree with that?
Yeah, and they're called commercial agents, right? They're called commercial agents that have been in the game for a good 2 years plus, and that's really still pretty new. But yeah, it is, man, because that's a completely different ball game. Getting into the investment side. I was lucky enough to be in the condo game where people bought them because they want to take their family somewhere really nice in the summer, but they're also buying it as an investment. And so I was really, the type of properties I primarily sold were really in the gray area between residential and commercial. And I got to really taste both sides of the emotional attachment to a property and buying it because you love the color of the floors and also the cold, hard investor side of it as well. It was really cool. But I got to spend most of my career dealing with and trying to make the wife happy on the colors and the husband happy on the numbers. And so I got a nice taste of investment, even though I was in the residential world. But people that are just doing primary homes and not second homes like I was doing, this investment stuff is like a whole different language.
Yeah, I agree. And that's why I think it's so important for investors to do that research and find agents who are also investing and understand what their portfolio looks like, how many deals they've done, because that's what's going to help them grow instead of most agents are just looking for a commission. So they want to just get one sale, but that's not what investors want. They're trying to build a whole portfolio. So over your 20 years, Ricky, if you could look back and I created this podcast to focus on the mindful approach to real estate investing. What advice would you give like investors right now in this market that you think would help them have a more mindful approach to what's coming and what's out there?
Nobody really knows what's coming. A lot of people want to think they know what's coming, but right now there weren't too many people that were calling for this multiple offer situation that we're having now. I've been saying it for months that lower, inventory dropping like a rock, interest rates dropping like a rock, and demand still building. This wasn't hard for me to see what was going to happen. But honestly, this isn't the best of situations, because if we start seeing multiple offers and the housing market really start heating back up big time, we already saw lumber prices jump up. Right? That's just the beginning. That's just the beginning signals of inflation. And that's in essence the definition of inflation. Yeah. And if inflation goes back up, if we see that start to rebound, then we're going to see 30-year fixed rebound as well. And this time they may not play with it. They may go way up because they say, okay, what we did last time didn't work. Right. Let's really pour it on and see what happens. And that could really put us into a serious shift.
Yeah.
So nobody knows I could see what's happening now happening, but what's going to happen past this little period, who in the world knows? I think we're going to have a really incredibly strong spring. I think we'll see a huge rush of buyers, a lot of demand, no inventory. It's going to be crazy. But then what happens after that? And so if you're an investor, I think flipping houses is probably done for right this second. I don't think anybody should buy a house thinking, I'm going to flip this.
The buy-in's too high.
Yeah. Well, yeah. Even if you buy it depending on your market, you're down anywhere from, 10 to, 30%. I don't know. All the local markets are different. Even if you bought it at that 10% rate where it's down 10%, even if you bought it at that new number, we still don't know exactly where there's too much uncertainty right now in the market for that short-term investment. Right now, where we do feel very certain is the long term, that I feel even if prices come down some from where it is now or how long this thing takes, I still feel like in 10 years that you're going to see some really great on your properties that you own. So I think walking into situations, buying them on the current cash flow and looking at it from a 10, 20-year standpoint is really the mindset you should be in right this second. If you can find something where you can buy it for 50 cents on the dollar of today's market value, sure. But where are you going to find that?
Yeah. And what's it hiding? What's it hiding if it's at that value?
Yeah.
I think
right now you just got to be in a cash flow, long-term perspective on your investing.
Yeah, I agree. Our 2023 investing term was asset hunting this year because I think people are a little bit over focused on like just numbers and like just what you're saying. If you can focus on the asset, and okay, here's the cash flow. It's whatever it is, $200 a month, but it has the potential to go so well because you know the area, you know the dynamics of that. That's an asset. And I think people forget to focus on the asset in real estate. And that asset is literally everything. Because you could even withstand like a little bit of negative cash flow if you're smart and you know what's coming. You might be wrong, but if you're right, you're going to really win big in the long run.
Yeah. Like I say, when you buy, if you're looking at very worst case scenario that you're still a winner,
right?
One thing I feel pretty certain on is that rents have escalated really high. I see a lot of data that rent's going to continue to go up, but only at 1 or 2% a year or something like that. I mean, wow, if rents maintain the level that they are, that is crazy if they don't go down. Yeah. That just tells you how strong that market is. But I would say, okay, all right, prices go down 30 to 40%. And along with rents. Okay. You buy a property and the value of it goes down 30% and the rents go down 30%. Okay. Are you still in good shape if that were to happen? You know, that's what I want to look at.
Yeah, right.
Am I still in good shape? What's my game plan at that point? Values go down 30% along with rents. What then? Am I still in good shape? And what's the chances of that happening? Rent's going down 30%. That's probably a very long shot.
Yeah, very.
Now, if you're in multifamily and you buy today, it's not that far off that it doesn't go down 30%. If you're buying a big commercial building, that could bring you back to, okay, why don't we buy fourplexes and 4-unit and lower properties so that we can get a Fannie Mae 30-year fixed and we can ride it out for 30 years if we need to. So there's a lot of different things to think about.
Awesome, man. I really appreciate it. Let me give all of these people, if they don't know you, let's make sure they know where to find you. So on Instagram, it's Ricky Carruth. And YouTube is the same, right?
Yeah.
Yeah. And then tell us a little bit about Zero to Diamond. I know that's an agent-based coaching platform of yours, but what's that all about and how long have you been? You've been doing that for 6 years?
Yeah. So started doing that 6 years ago. It's literally a course. I've got a bunch of courses, like 6 or 7 courses in there, scripts, videos of me making calls, 60-day challenge, marketing, social media, anything I could think of. And so I update it every year around the end of the year, and just for whatever I learned throughout the year that I can add to it. But it's also a platform, social media platform for agents to connect and create your profile and DM people, create groups, post on your wall, all that good stuff. But no, I think there's 20,000 members there now.
We switched
it over a year ago. We had 50,000 members on the old platform, and we switched it to a social media platform where everybody could connect. Before, it was just a website you go to and take the course.
Yeah.
Now it's a website you can go to, connect with all the other agents. And it's just continuing to build that community. But like I say, man, there's been so many agents who are crushing it using the philosophies and strategies there. So I answer all my Instagram messages every day. So that's really tough to do, but I spend an hour.
It's really worth it though. Even at your level, don't you think it's worth it? All of us know when it's not this person in the DMs, it becomes like, why do I want to talk to an assistant there?
Yeah, so far it has been, because people feel like, wow, I'm really connecting with the person. There's a lot of debate there. There's a lot of debate there about time spent, ROI on time, and making myself so available to the public. But the thing is, for me, is I'm a grinder and come from such humble backgrounds that all these people are like, they need so much stuff. And I feel like I'm letting people down if I don't listen to those questions and problems and help them through those situations. So it's just something I do. I can't say I'm going to do it forever, but it's something I've maintained up to this point. So we'll see how that goes.
Yeah. All right, man. It's been an absolute pleasure. Hope everyone will hop over and follow you. They probably already are, but it's been great talking to you and great to finally meet you. It's exciting to talk investing with you. So I really appreciate your time.
Yeah, man. Enjoyed it. We'll do it again soon.
All right, man. Thanks. This was episode 30 with my guest, Ricky Carruth. We'll see you next week. I hope you enjoyed that episode of Zen and the Art of Real Estate Investing with me, Jonathan Green.
And I just want to remind you, and this is always an uncomfortable part, I don't want you to think that I'm begging for you to like, subscribe, follow, do whatever you have to do for the podcast, leave a 5-star review. But if you like the podcast and you think it adds value in the real estate investing sphere, then just do me a personal favor. Like the podcast, follow it, share it when you can with your friends, and be so kind as to write a 5-star review if you believe it deserves a 5-star review up against what else is out there. I would really appreciate it, and I hope you keep listening.